welcome back to my channel A-Level Guide. Now we'll be continuing with the paper May June 2021 variant 3-2 and the question number 2. I've made the video for question number 1. You can go see my channel. Alright, so in question number 2 it's related to ratios and a bit of on non-current asset schedule. I hope you know the format for non-current asset schedule. If you don't know, write down in the comment section. I'll separately make a detailed video where I will explain every bit of it, but I'll give you a brief intro in this video so that you understand how we're supposed to solve the question. Alright, now first look into the question. The accounting year Y Limited ends on 31st December. For the year ended, Y Limited had revenue 806,400 and non-current assets turnover of 2.10 times. Alright, so we've been provided with certain information. So the A and B part are related to theory. If you still want any theory answers, do let me know. I'll make one video for that too. So theory basically very easy, and marking scheme it's detailed explanation is also provided, so I don't think you need any kind of help in that. So the B part says that you're supposed to calculate the total net book value of the non-current assets. So simply the formula that you use is basically sales divided by the net book value of assets into 100. This is the best formula. Very easy. You just need to put in the figures and calculate. So it's basically 80,6,400 and divided by the x, because you're supposed to find, and the answer is in times. Sometimes it is in this, sometimes you write it as times, but in this question it is required for times, so we'll use this, and it is given 1.2. so the x value is basically very easy and simple, that is 384,000. That's all that you need to know. Now in the next part we're going to make the non-current asset schedule. It's a bit lengthy, you require a lot of working, and there are some concepts very important. So first I'll make a schedule, a rough draft or the format, and then we'll begin with the question. Alright, now so if you look into the format, it is basically the brought down at the start, like the cost of the asset. If there's any revaluation, the addition means if you've purchased any, disposal is if you have sold any, and then you have the carry down. Lastly, we have the accumulated depreciation part, where you write the brought downs, you write any revaluation if there is any, and you write off the revaluation if for instance you have 50 brought down and there is 10 revaluation, basically it is added, and you have at the start depreciation is 10, revaluation, so you will write off the depreciation, because that is actually the main part of revaluation. Disposal charge for the year means the current year depreciation, the carried on, at the end of it you were supposed to write down the net book value of assets. I just made 2 columns for the asset. There may be 3, there may be 4, and there is also a total column included. So now we'll jump into the question and see what things are required, and put the figures into the format and calculate the net book values at the end of the year. Right now we'll begin. First of all, we'll write the at the start we will write the cost, but before that we will read the additional information. So first of all, we have the non-current assets are into 3 categories: property, plant, equipment, and furniture. The following accumulated depreciations have been provided. The net book value is in the proportion 5:3:2. Now you should understand here is that they've given the net book value ratios, all right, and they've given you the accumulated depreciation. You yourself have to calculate the brought down or the original cost of the asset. Next up, there was 1st January 2020, property was devalued at 360,000. So office furniture was purchased. On 1st July, an item equipment was part exchanged. Paid cash 34,000 as part payment of the new item. The old item had an original cost of 35,000 and was fully depreciated. The part exchange value was 8,000. We'll do this in detail. A full year depreciation is charged in the year of purchase and none in the year of sale. Then their following methods have been provided, and now you're supposed to prepare the non-current asset schedule account. It's not difficult, yet it is lengthy. Right now, so we are going to do the working here. So the ratio is divided as 5:3:2. The total net book value of all assets were 384,000. We are supposed to find the original cost here, that we don't know because we just been provided with the depreciation and the net book value. So if you divide the net book value in these ratio, you get the figures as 192,000 for property, 115,200 for equipment, and 76,800 for furniture, and the total is 384,000. I hope that's clear. They've also given you cumulative depreciation in the additional information at the very start, that is 128,000 here. It is 168800 here and 101,200 here. All right, now it's very easy that you're supposed to calculate. Now the one mistake that students mostly do is basically they subtract this. You are supposed to add depreciation to the net book value to get the original cost. Generally, how is the format? You have the cost, you subtract the depreciation, and then you get the net book value. And as I already told you in my previous videos, this is basically backward working. So net book value will add depreciation to lead toward the cost. So I hope you understand this, and hence the answer will be as follows. You're just going to list them down, and that is basically the original cost that we have calculated, 178,000. So we list all the brought downs here and get the totals. The same values will be posted here, and you are also supposed to make a total column. It is mentioned in the question that you're supposed to make the total column, and that is basically 782,000. Is that it? All right, now you're supposed to have the revaluation part. I'm going to erase this. If you look into the information, it was clearly stated that the property was now valued at 360,000. Originally it was at 320,000, and now it is at 360,000. The revaluation is very simple. It is 360 minus 320 is 40,000. You are supposed to write it here. All right, and 40,000 in the last column. And you all know that property is devalued only. Then if you talk about the addition section, it was stated that plant and equipment was bought, and before that office furniture was bought at 25,000. So in addition part you can write 25,000 here. Okay. Now if you look into the plant and equipment section, a detailed information was provided. So it said that old equipment was part exchange for the new one. Now you need to underline few things. Y Limited paid cash 34,000 as a part payment for the new equipment. So they have paid 34,000. If you calculate the cost side by side, so 34,000 have been paid. It is not the total cost. It is a part of the total cost. Then the old item had original cost of 35,000 and was fully depreciated, which means if it had a cost of 35, it was depreciated 35, and nil balance is at the end. And it was said that the part exchange value was 8,000. Still the item had been scrapped, the life had been done for all of the years, but you still received 8,000 for that. So the total value will be 34,000 plus 8,000, and that will be the total cost of the addition or the purchase that you've made for plant and equipment. Hence the value will be 42,000, and the total will be 67,000 in the last column, because that's the total column. And you are supposed to fill it side by side so that you are not mistaken. All right, so I hope till here you are clear. Now for the disposal section, you're supposed to see we disposed of the plant and equipment which was worth 35,000 and was fully depreciated. So you are just supposed to subtract. And do remember, in the disposal section of the asset part or the cost part is basically you include at cost and not the depreciation, not the selling price. So 35,000 will also be subtracted here. And now you can easily write the carry downs and balance off. Also horizontally and even vertically you can account, and you can get to know if you've added the correct amounts. So this is basically the final carry down that we have now calculated, It's very easy. You have any confusions, write down in the comment section and we'll discuss that soon. All right, so we just put in the figures in the format and we're done with this part. Now we're left with the accumulated section part. I'll erase this and we'll do the working here. Alright, now so we'll work for the depreciation part. First of all, we have the cumulated depreciations at the start, which was given in the additional information. So that's not something new that we're writing. It was already provided. So you're just supposed to state all the figures and add them in the total section column in the last one, which is 98,000, and you're supposed to write it here. Alright, so this is the depreciation part that we're doing. Next is the revaluation. As I already told you in the beginning, the format says the revaluation amount is supposed to be deducted in the cumulative section, because now you're going to write off. So you'll write off the depreciation here. So 128,000 will be written off. Alright, because the asset have been revalued to 360,000. So we write off the depreciation because it has been revalued, and that is how you're supposed to write it here as well. And it will also be subtracted here. The next thing is that you're supposed to write the disposal. Again, disposal, here you're supposed to write the depreciation amount. But we read in the question that there was no depreciation, it was fully scrapped. So which means this depreciation is same as the cost. Hence 35,000 is same the depreciation that you're supposed to remove, and you will be subtracting here. Now the most important part of this whole section is the charge for the year, which is basically the current year depreciation, which requires working. So we will be calculating, we will be adding the new figures, we'll be deducting the disposals, we'll be taking into account the revaluations, and then we'll be calculating the depreciation. So now let's work for that. Alright, now so the working for the charge for the year is very simple. I've erased the area. Now we'll be doing the working for property. Now the asset have been revalued. They have said that it is a straight line method over 20 years. Alright, so the 20 years is the whole life. We don't know how much have been used, how many years have passed since you have bought the property. So you will be calculating that. How will you do that is 128,000 is basically the cost of is the depreciation. All right, and the cost of the asset is 320,000, is it? So you are supposed to divide it by this, so you get to know how many years have been passed. So for how many years you have been charged this amount of depreciation. So that is basically, if you multiply by 100, you get a 40% answer, which means for this cost 128,000 have been depreciated, and this consists of 40% of the years of the total years it has. So for total life of the asset is basically 20%. All right, so in the additional information it has been provided that 20 years, not 20%, sorry, 20 years is the total life of the property. 40% have been used, which is basically 8 years. Is that clear? Now how many are the remaining years? That are 12 years. Clear? For the total 20 years, for the 8 years, this depreciation have been charged. Remaining 12 years have been left. Now on 360,000, you'll be dividing it by 12 and you will get the answer as 30,000. Is it clear? So 360,000 is the new value. Divided by 12 gives you 30,000 depreciation per year. Is that clear? Because it is straight line. So 8 years it has been depreciated, the remaining 12 years have been there, for which you will charge yearly depreciation on the new revalued amount, and hence it will be 30,000. So we'll just state the value here as 30,000. I hope this is clear. Alright, now for the plant and equipment, it is very simple. 291,000 was the cost of the asset. We are supposed to minus the cumulative depreciation because we are opting for reducing balance method. It is 20% reducing balance method. You subtract any disposal because there is no addition. It is addition of 42,000, but they said that none in you are going to charge in the year of purchase, but none in the year of sale. So in this amount you have included 42,000. So 291,000 is basically inclusion of the addition, and you're supposed to subtract 35,000, which is the depreciation, and the accumulated depreciation, and the value that you're supposed to get and you're supposed to apply 20% to that, which will give you a total of 31440. So this is the amount that is the current year depreciation for plant and equipment. I hope the things are getting clear to you. It is very simple. 291,000 is the total cost. 168,000 is basically your accumulated depreciation. 35 is the disposal depreciation, into 20% is 31440, and you're just simply going to write down this amount here. All right. Now next is the furniture, for which you are supposed to do the working. For furniture, the working is very easy, the simplest. It is 203,000 is the cost. We will apply 20% to it because of straight line method, and the answer we get is 40600. 101,200 is the depreciation. The straight line method is supposed to be applied at 20%, and hence you can get towards the depreciation. Depreciation for this is 40600. And the current year depreciations will be added and posted in the last column as 102040. So these are the total current year depreciations. You can now calculate the carry downs, and we will finally calculate the net book values. Is that clear? So the ending balances are 330. How do you get this? Is basically, this is the carry down, this is the basically the cost at the end, and this is the depreciation at the end. So cost minus depreciation. So you can total all the columns and write the amounts. Alright, so I've listed the amounts, and net book values at the end will be as follows. And you're just supposed to write down the amounts, and also don't forget to write in the total column. Alright, and that's it. We also have the net book values at 31st December 2019, the previous year. They write down in the marking scheme, they're just the same as we calculated earlier, which are 192, 115, 200, 76, 800 that we calculated earlier, where basically the values, you can go back and check. We calculated the net book values for 2019. You will just